Rand trading around 713, 714 this morning. Of course, we had the euro yesterday dipping below 131 against the dollar. So it seems despite that package that came through for Ireland on Sunday, risk aversion very much still in this market.
Morning, Stephen. Yes, you're absolutely right. I don't think markets have been soothed really by the bailout package that's been offered to Ireland, and it's quite surprising. But I think at this point, investors are still concerned about other peripheral nations in the EU, like Portugal and Spain, that also are known to have sovereign debt issues. And so I don't think that they've really embraced the Ireland package to the extent that one might have expected. But we also had the Rand come under pressure again from some Japanese data that was released this morning. Japanese industrial production was up in October, but it was down quite substantially on a year-on-year basis when compared to September. And I think that also didn't hearten investors this morning.
In the meantime, how's the Rand been reacting against the euro? Because we've seen the euro weakening quite dramatically against the dollar.
Yes, Stephen. Well, the Rand is, as you said, both the Rand and the Euro have weakened against the dollar really on a basis of a flight to safety in our view. But the Rand has performed relatively well against the Euro because the Euro has come under pressure from all of these sovereign debt concerns.
Of course, foreigners net sellers of South African bonds last week and of course selling equities as well at this stage. So the pressure really coming from all sides.
Yes, absolutely, Stephen. And of course, people have, today we have the trade balance as well as monthly fiscal balance data from the government. So that's also going to affect the Rand's movements today. As far as the trade deficit is concerned, we saw a surprise surplus in September, but we don't think that that would have been maintained in October because firstly, the surplus that we saw in September was really a recovery from the massive deficit in August. As you'd recall, there was widespread industrial action at that point, which really pressured export growth in August, which then improved in September. But in October, of course, we saw a bit of a slowdown in the EU as these sovereign debt concerns were reignited. And also with consumer spending in South Africa starting to pick up again, we think that import growth would have been boosted by that. So we're looking for a small deficit in September for the October number, and we could then see some renewed Rand weakness into this afternoon.
Those government financing figures, also monthly data. What's the market looking for in there? What does it give you an indication of?
Well, Stephen, there are no market forecasts really for the data, which is quite volatile. But what it does give is an indication of whether government revenue and expenditure is on track. That, of course, helps one anticipate what the likely budget deficit or surplus is likely to be. So I think that's why markets would be primarily focused on that figure today as well as trade.
Of course, we have some forecasts that the euro could weaken to 128 against the dollar by the end of the year. I don't know if you agree with those forecasts. If you do, though, what would the implications be for the Rand going in towards the end of the year?
Well, Stephen, we've long been saying that we expect the dollar to come back headed into the end of this year as well as early next year. So we would expect the euro to weaken against the dollar, but we're also expecting that the Rand has sort of run its course for now. We're also expecting some Rand weakness into the end of this year, sort of the 720 to 730 level by December.